Good morning. My name is Cindy Arnson. I'm the director of the Latin American program here. It's a pleasure to welcome so many old friends and new friends to the center for this important discussion today. Today's meeting is part of a 3-year research project based here at the Wilson Center, but carried out in collaboration with Marcelo Bergman, who's here in the middle, and Jim May of the Universidad Nacional de 3 de Febrero in Buenos Aires, Argentina, and Jim Mahan, who I'm not finding, there you are, from Williams College. The purpose of the project is to understand more fully the impact of regressive taxation on poverty, inequality, and social structures in Latin America, and more particularly to examine the political economy of efforts to reform tax systems in Latin America to make tax structures more equitable. And in light of what we learn, we hope to come up with some politically viable alternative proposals that would improve the distributive impact of taxation. To frame the discussion, I'd like to just lay out several basic concepts. We know that there's a lot of good news in the region. The IDB, the World Bank, others have shown that that poverty throughout Latin America has gone down considerably over the last decade. There have been some additional reductions in inequality. Prior to the 2008 recession, which caused a sharp contraction throughout the world, and beginning in 1990, social expenditures as a percentage of GDP increased more than 5%. Per capita social spending doubled between taking as a base point 1990 and 1991 and the years 2006 and 2007. But notwithstanding these improvements on the expenditure side, the role of fiscal policy in reducing poverty, systems for collecting tax revenue in the region remain highly regressive. They have done very little to improve inequality and in a number of cases have contributed to its worsening. Well, why is that the case? Tax revenue as a percentage of GDP increased overall throughout Latin America and the Caribbean between 2000 and 2008. But indirect taxes on goods and services, which affect the entire population regardless of income level, constitute a disproportionate share of tax income. Direct taxes in Latin America constitute less than 1/3 of tax collection. They are lower in Latin America than in sub-Saharan Africa. A comparison between the Latin American and Caribbean region and the countries of the OECD. Personal income taxes constituted only 1.5% of GDP on average in Latin America, whereas they constituted approximately 9% of GDP in OECD countries. I could go on, but there are a number of background studies that are available outside that I think illuminate some of these broader issues. I'd like to briefly introduce our panelists. We have really a star-studded cast this morning, and we are thrilled to invite Santiago Levy as the principal keynote speaker this morning. Santiago is the Vice President for Sectors and Knowledge at the Inter-American Development Bank. He has also held a number of senior positions at the IDB, including the General Manager and Chief Economist in the research department. I think it's not part of his official bio, but one of the more extraordinary parts of Santiago's career, I think, is having designed the Progreso program in Mexico, which is the first conditional cash transfer program, which is now pretty much the template throughout the region for reducing levels of poverty. We're also delighted to welcome for the first time to the Wilson Center Vito Tanzi, the former director of the Fiscal Affairs Unit at the International Monetary Fund. Vito is an economist with extensive experience in government, in international development and financial institutions, and in academia. I don't think there's an organization that works on economic policy that he has not served as a consultant to. The Inter-American Development Bank, the World Bank, the United Nations, the European Commission, Commission, the European Central Bank, the Asian Development Bank, on and on. He's the author of over 20 books and multiple articles on this subject. And I'm also very delighted to welcome back to the Center Carlos Gutierrez, a member of the Woodrow Wilson Center Board and currently the Vice Chairman of the Institutional Clients Group for Citigroup based in New York. Carlos served as Secretary of Commerce during the administration of George W. Bush, where he played a leading role in the approval of the CAFTA-DR free trade agreements and also was involved in the negotiation of the Colombia FTA that our Congress finally passed. He has served at the Kellogg Company, and also during the Bush administration was co-chair for the Commission for Assistance to a Free Cuba. He has studied in Mexico and is a graduate of the Monterrey Institute of Technology. I'd like to ask all of our speakers to feel free to use the podium or the microphone at the table, however you would like. I hope I'm not revealing any deep, dark secrets to say that the IDB will be issuing a report sometime in the first several months of 2013 on the issues of taxation, so we could not have a better person to lead off our discussion today. Santiago.
Thank you. Well, good morning to everybody. Let me begin by thanking the Woodrow Wilson Center, and in particular thanking Cynthia for this invitation to be here this morning. It really is a pleasure to be here. And as Cynthia just mentioned, great minds think alike. So the fact that the Woodrow Wilson Center and the IDB are working on the same issue means that the issue is really very important. And next March at the annual meetings, the bank will be presenting to the Board of Governors the flagship report to the bank on taxation. In fact, one of the editors is sitting right here, which is Eduardo Lora, former chief economist at the bank, and some of the authors are also here, Luis Vilela. So I'll be picking their brains and using some of their own research for my remarks, and then I'll put in some from my own harvest on here. The issue is really very, very broad. Taxation in Latin America is extremely broad, and the region is increasingly heterogeneous. It is ever more difficult to speak about Latin America in one sentence. It's a very, very diverse region. And heterogeneity from the point of view of taxation matters immensely because it makes a lot of difference whether countries have oil versus countries don't have oil. It makes a lot of difference whether countries are small or big, or whether countries have exposed to international trade or not so exposed to international trade. So there's a lot of variation in countries across Latin America, and it makes it very difficult to make broad remarks. Given the title of the conference on the political economy of taxation, what I'd like to do is basically use my time to concentrate on three topics. First, I want to give a sense of the trends in taxation in the region, what has been happening, and this draws a lot from the report that we'll be presenting that Eduardo coordinated and Luis participated. We'll be presenting next March. Then I want to give my own interpretation as to why the region is characterized by low taxation and sort of what are the political issues behind that. And then thirdly, I want to speak a little bit, what are the issues looking ahead, sort of looking forward. So the good news is that tax revenues in the region have actually grown faster in Latin America than in any other part of the world. The region has made a big effort to increase revenues. A lot of it has been driven by macroeconomic considerations of fiscal balance. But that said, the tax to GDP ratio of the region has increased importantly. Nevertheless, it is still the case that tax revenues in Latin America, given its income per capita, are below what one would expect. To give some numbers for comparison, the tax to GDP ratio of OECD countries on average is about 25%. The tax to GDP ratio of Eastern European countries is about 24%. For Latin America is 17%, which is the same number as Asia, but the income per capita of Latin America is substantially larger than the income per capita of Asia, so one would expect a larger number for Latin America. And the tax to GDP ratio of Africa is 16%. So if you think about the comparison of income per capita between Africa and Latin America, and we're taking pretty much the same tax to GDP ratio, says yes, a lot of progress has been made in terms of raising revenues, but there's still a long way to go. Within the region, however, that average of 17% has a lot of heterogeneity. Brazil is a country that probably is at the extreme of Latin America, that has one of the highest tax to GDP ratios. Probably it's the highest in Latin America and among the highest in the world, about 30-some%. And at the other extreme, you have countries like Guatemala with tax to GDP ratios of the order of 10%. So there's a lot of variation within Latin America between 10 and 30%. The average is 17%. The reason taxes in Latin America are low relative to GDP, given the income per capita of the region, and that qualification is important, is mostly because income taxes underperform. On average, the value-added tax rate in the region more or less collects numbers that are comparable to the OECD. Mexico is an outlier in that context because we have the lowest VAT collections of the region, which is an interesting example. But on average, the VAT in the region is about 6.5%, 7%, which is comparable to the OECD ratios. The reason Latin America underperforms is because of the income tax. And with the income tax, it's not so much the corporate income tax that underperforms as the personal income tax. Personal income taxes in Latin America are very, very low, and that's an important point. And I don't know what whether Vito will mention that on his point. Vito has worked a lot on personal income taxes. It's a big point that he's made in the past. He's correctly made them. Because of that, because of the fact that income taxes are relatively less important relative to value-add tax, the tax system as a whole is on the whole regressive. But the regressivity comes from the fact that income taxes are not doing its job. It's not that value-added taxes should be more progressive. In fact, in a few minutes from now, I'll be arguing against using the value-added tax as a redistributive tool. I think it's extremely expensive to do so. But certainly there's room for making the tax systems in the region more progressive by improving particularly on income taxes. Yet another characteristic of Latin American taxation is the very, very high rates of evasion and the very high rates of informality. Relative to other countries of the world, evasion rates in Latin America are very high, and this is true for the personal income tax, for the corporate income tax, and for the value-added tax. And this has to do with the very high rates of informality that are characteristic of Latin America, given its income per capita. Another feature that I want to highlight is, and I think Cynthia mentioned it before, there's a lot less redistribution occurring through the taxation than one would expect for countries of the income per capita levels that Latin America has. So governments take in less because the tax revenues are less, and therefore the redistributive effort that is done is less. I'll come back as to my hypothesis as to why it is the case, but I note now that there's a lot less redistribution. Taxation has improved immensely, as I mentioned before, driven mostly by macroeconomic considerations, but it's still the case that taxation is very much pro-cyclical. The region has to improve a lot in terms of the instruments that it uses from the macro point of view. And yet another feature, which has to do, I think, with the low tax to GDP ratio, is that taxation in Latin America is extremely centralized. With the exceptions of Argentina and Brazil, most revenues in the countries are collected by the central government, and subnational governments play a secondary role. So these are sort of broadly, despite the fact that the region is quite heterogeneous, broadly, if you were going to put in one single postcard, give me your 3-minute description of taxation in Latin America, these are the features that I would highlight as to what Latin America looks like. The second observation that I'd like to make is this probably leads to a low taxation, low spending, low contribution equilibrium. A 17% to GDP ratio is low given the income per capita of the region. And the question is, why is taxation low in the region despite the efforts that have been made? And why is the redistributive effort that is done through the tax system low relative that could be made? And I think there are 3 main reasons that I'd like to highlight. One is tax expenditures. The lingo in the United States would be tax loopholes, or various provisions in the tax code that allows for special treatments. The technical word that people in taxation use is tax expenditures are very, very high in the region. So the corporate income tax might say the rate is 25%, but the transportation sector gets a special treatment, and the agricultural sector gets a special treatment, and these particular firms in telecommunications get a special treatment. This varies a lot from country to country. And the value-added tax rate might be 15 or 17%, but food and medicine is exempt, or transportation is exempt, whatever. The fact is that tax expenditures actually reduce the tax. And to give a sense of how big this is, the numbers of the IDB report calculate that for Argentina, if tax expenditures were not there, they would have collected 2.2% of GDP more, Brazil 2.3%, Chile 4.9%, Colombia 3.5%, Guatemala 8.6%, Mexico 5.3%, Peru 2.2%. So somewhere of the order of 2 to 3% is being lost in revenues, not because the rates, the average rates for the income tax or for the value-added tax are not right. In most cases, the income tax rates are in the 25 to 28% range. The value-added tax rates are between the 15 to 17%, 18% range. It's not so much because the average rates are wrong, but because there are a large number of tax exceptions, special treatments, and broadly under tax expenditures. And if you just fix that, that would bring about 2 to 3% of additional GDP, maintaining the rates as they are. Very much the discussion that is happening today in the US Congress, a few blocks down to here. Tax expenditures undermine the tax base, but they also create a very perverse political economy, and is one of the reasons why I think tax revenues in the region is low. Because these are very obscure. There's very little accountability, there's very little transparency about tax expenditures. Very few people know that they are there, very few people understand them, and even though lately some countries are beginning to deliver reports to their legislators as to what are tax expenditures, very few people read them and very few people understand them. So the fact of the matter is that there's a lot of inequity in the tax code, de facto, and very obscure inequity. Nonetheless, people know. At the end of the day, you realize that some sectors of the economy are paying more, some sectors of the economy are paying less, some people are getting a special treatment for whatever reason, reasons that aren't always clear or understood. Maybe some were historically justified in the past, but they don't have no reason to be. Tax expenditures are big. They're bad for horizontal equity because it implies that some sectors are giving preferential treatment to other sectors. They're bad for productivity and for resource allocation, and they undermine the tax base. I think the region would be much better served by closing broadly all the tax loopholes, including in the value-added tax rate. In the value-added tax, which is a workhorse tax of Latin America and is the tax that on average collects the most of the tax expenditures are justified on the redistributive grounds by trying to say we don't want to have high taxes on medicines, on food, on transportation, on fuel oil or natural gas, things that households, particularly poor households, loom large in their budgets. More technically, the proportion of expenditures into these items is higher for the poor than for the rich, so that homogenizing the rates would actually be in principle regressive. Yes, that is true, but it is also true, and this is insufficiently noticed, that the sacrifice that is made in terms of tax revenues to subsidize the first 2 or 3 deciles of the distribution by exempting goods across the whole distribution is way too large. This is an extremely inefficient way of redistributing income. I've done some numbers for Mexico. By my own calculations, it cost for every peso of sacrifice revenue from the VAT, only about 25 cents reach the first 3 deciles of the distribution. So you're wasting 75 cents to deliver 25 cents to the first 3 deciles distribution. And the fact that Latin America has much better redistributive mechanisms today through the expending side of the budget would imply that there's a lot of room to fix tax expenditures. And there's 2-3%, again, without raising the rates. You would gain in productivity, you would gain in efficiency, and you don't have to sacrifice distributional considerations. A second and perhaps deeper point as to why tax to GDP ratios are low in the region, in my view, has to do with the very low connection that is made by citizens in the region between taxes and contributions. And this is a deep point. There are 2 reasons for that. Social policy and decentralization or subnational taxation. I'll come back to that. But let me first take the issue of social policy. Cynthia mentioned before that after Mexico and Brazil being pioneers with conditional cash transfer programs, pretty much every country in Latin America today has a conditional cash transfer program. For those of you who are not aware of these are basically mechanisms by which poor households get an income transfer conditional upon some behavior as to investing in their human capital, going to school, going to health clinics. These programs take about anywhere between 0.5 to 0.7% of GDP in terms of expenditures. They've been very effective because they're targeted on the first 2 or 3 deciles of distribution, and there have been one of the reasons, not the only reason, why inequality in Latin America has actually fallen. A distinctive feature of Latin America vis-a-vis the rest of the world. And it is part of the explanation, why are we not using the taxation system to redistribute? Part of the answer is because we're using the spending side to redistribute. And your views on that might be, at the end of the day, what matters is the net effect of government intervention, whether it's on this side or on that side. And that's why, in fact, I don't expect, and I don't think there should be a lot of redistribution through the VAT. There should be more through the income tax. But conditional cash transfers programs have taken away the pressure to redistribute through the taxation system. And in addition to, and less noticed, has been the growth of what I like to call non-contributory social insurance. In countries of Latin America in which the informal sector is anywhere between 50 to 70% of the labor force, the only exceptions being Argentina, Uruguay, Chile, and to some extent Brazil, in every other country of Latin America, the informal sector is about 60–65% of the labor force. What does that mean? It means that governments realize that 2/3 of the labor force have no access to pensions, 2/3 of the labor force have no access to health insurance. What has occurred in the region over the last 15 years, beginning in Brazil with President Cardoso, that introduced non-contributory pensions to people who had not contributed to a pension, then later in other countries in Latin America, beginning in Colombia with health programs for informal workers through a subsidized regime, the connection between contributing to your social benefits and receiving social benefits has been gradually eroded. 2/3 of the labor force receive health benefits without contributing for their health benefits. 2/3 of the labor force will eventually have access to a pension without having saved for a pension. And if you think about Social Security as broadly, not in the United States sense of only pensions, but in the Latin American sense in which Social Security encompasses health, disability insurance, and a whole bunch of other benefits, for 2/3 of the labor force, non-contributing, in fact, is no consequence. Let me put it this way. Why should I contribute if I don't contribute, I pretty much get the same anyway? Mm-hmm. So the connection between contributions and benefits has been eroded by the growth of benefits to the informal sector. Interestingly, non-contributory social insurance, it actually takes, in budgetary terms, more resources than conditional cash transfer programs, even though conditional cash transfer programs actually have become more famous, perhaps because of the impact evaluations or because, the novelty. But in terms of where the real money is, there's more money in non-contributory social insurance programs than there is in health programs. So informality is a big issue. And the design of social insurance erodes the tax base because firms that fail to register their workers for Social Security, and why should they? Their workers are going to get it anyway. Will also evade tax on the VAT side and will most likely also evade income taxes. So you're eroding your tax base very, very important. The second component of the low connection between contributions and benefits has to do with the fact that a very large part of the tax stake is centralized in the central governments. Property taxes are very, very low in Latin America. With the exception, again, of Brazil and Argentina, in every single country in Latin America, subnational taxes are less than 1% of GDP. The average is about 0.7% of GDP. This is also a finding of the report. But in fact, in many countries, even countries that have high per capita, like Mexico, it's about 0.2% of GDP. So think of a county in the United States in which you associate the property taxes that you pay with the education that you get in the county, or the basic services with whatever you get in the particular county. There's some connection that the citizen perceives between the effort being made to pay for something and the benefit that you're going to get for something. But in many countries in Latin America, this is lost. It is lost because revenues that come into subnational governments, either state government or municipal government, most of the time come from revenue sharing formulas from the central government with very little effort on the part. So why should I pay? It doesn't really matter because I'm going to get it anyway. Yet the third element, in my view, that is part of the explanation for the political economy explanation for the very low tax revenue to GDP ratio in Latin America has to do with the mix of corruption, low quality of services. if the perception of citizens is that there's going to be high corruption, that some of this money is going to be stolen away, or that the services that I'm going to get in return for my taxation are low quality because maybe there's a public sector union that's behind it, or maybe because there's really no competition, the services are provided by a government monopoly, you get low quality services, then the willingness to pay, so to speak, for these services is low because the actual value that you get for the services is very low. So if you put together a semi-perception of corruption, a perception that even if I don't contribute, I will get benefits anyway because of non-contributory programs, and redistribution occurring through the expenditure side of the budget, and a very highly centralized systems, it creates an atmosphere in which evasion, informality is acceptable, is not frowned upon, and in which it's socially acceptable to actually not pay taxes. Our report, the IDB report, has a very interesting graph from Latino Barometro, which is a survey that conducts surveys across Latin America. And so in most countries that we surveyed, more than 50% of the population say it's okay to evade taxes. It's not a shame. It's not a social shame. So this is sort of a cultural attitude. And this produces then what you might want to call a low tax, low service equilibrium in which society sort of escapes into informality and society escapes into a very low retributive effort by the state, given the income per capita of the region. So let me close now with sort of what future challenges lay ahead on taxation for the region and some lights as to how we could get out of it. First, if you're standing here in December 2012 and you look forward, yes, the past 10 years, with the exception of 2008, 2009, have been very good. It is not evident that the next 10 years will be equally good. We have to think about a new normal in which perhaps China will not be the engine of growth of the region as it has been in the past, and in which perhaps Europe is going to be, trapped in its difficulties for at least 4 or 5 years to come, so that the tailwinds that the region has been having in the past might not be there. The first task that taxation systems in Latin America have to do in the decades ahead is to continue to ensure macroeconomic stability. And this task is going to get a little bit more difficult because after 2008, 2009, primary balances in most Latin American countries have deteriorated slightly. So yes, the macro is sturdy, but at the margin, not so sturdy. And countries will have to make an effort to increase primary balances. This will put pressure to increase taxation because at the same time, governments in the past decade have taken on huge spending, particularly on social spending, that even though they might not be quote-unquote legal entitlements, de facto are entitlements. It's extremely difficult to think that these non-contributory pensions will be removed. It is very difficult to think that conditional cash transfer programs will be removed or that the growth of all these non-contributory health programs will be removed. In fact, one would expect the opposite. The pressure will be to expand them, both in terms of coverage and in terms of generosity. And this is taking large amounts of the budget. That plus the macro pressure says there will be an important discussion in the region ahead as to how increase taxes to GDP. From the technical point of view, it's fairly clear what needs to be done. You've got to focus firstly on the income tax, particularly the personal income tax. Depending on which country you're looking at, there's anywhere between 1% to 2% of GDP at least of personal income taxes that could be additionally collected. You have to do more horizontal equity and close tax expenditures on the corporate income tax and on the VAT, and that could produce, on average, about 3% of GDP for countries. There's something else that is insufficiently noticed on the taxation side because it's not recorded as a tax expenditures in many cases. Energy subsidies. These are very large in some countries in the region. In Venezuela, it can be 5%. In Ecuador, it can be 4%. In Mexico, it can be 2% of GDP. In Bolivia, they're about 1.5% of GDP. So there's still a room there for some collections. But technically, if you worked on the personal income tax, if you got rid of tax expenditures, and if you worked on the tax expenditures in the VAT, there's on average between 2 and 3% of GDP of additional revenues in the region. How to do it? I think it's going to be very important to understand the political economy of each case and to understand the reasons why societies have been so reluctant to increase taxes in the previous decade, to be able to tackle the reasons that are behind the low tax to GDP ratio. The Economic Commission for Latin America, la CEPAL, has for a long, long time argued in terms of social fiscal pacts. A new social fiscal pact in which citizens can much more clearly identify the benefits of taxation in a state that ties more closely benefits and contributions. In my own personal work for Mexico, I have been arguing that the division of the labor force between the formal sector and the informal sector, with contributory social insurance for the formal sector and non-contributory social insurance for the formal sector, which characterizes pretty much all of Latin America, is a big stumbling block, and that what we should do is link contributions and benefits in a more direct way by tax reforms that can produce a much, much integrated social insurance system. You can argue that, you can argue CEPAL, social fiscal pact, but clearly a new political architecture that citizens identify as closer benefits, less corruption, more transparency, better quality of services will be an indispensable part of the discussion. In my own view, it will also need deeper architectural changes, because the previous tendency of the last decade in terms of social policy of delivering benefits and benefits and benefits without connecting them to contributions will have to be reverted. And this is going to be a very, very difficult operation. This will have to be done in the context of much more democratic governments that have been in the past, and it will require a lot of discussion, not only a lot of technical analysis, but a lot of political construction, a lot of devolution of authority to some subnational governments, particularly in property taxes, and a transition to about a tax rate that's going to be 5-6 points more GDP over the next decade. So let me stop here and pass on the word to Vito, and thank you all for your attention. Thank you.
Great, thank you. Vito, por favor.
Yeah. Thank you very much. First of all, I also like to thank Cynthia for inviting me to this conference, and I want to thank Santiago for this marvelous introduction that will fit very nicely with my presentation. I hope that the two will be complementary to each other. When I got the invitation to this conference, I was very happy because although in the past few years I've been interested more in European problems, which are not very small, especially the Italian problems on the day, than on Latin American problem. But I was reminded that maybe I've been involved in Latin American taxation longer than almost anybody around. When I was a graduate student at Harvard in 1962, I was invited to work in the summer for what was called the Joint Tax Program. The Joint Tax Program was a creation of the Alliance for Progress, which was a creation of the Kennedy administration, and was financed by the IDB, by the UN, and by the Organization of American States. Well, that's why it was called the Joint Tax Program. My boss at that time was somebody who became a president of El Salvador, Alvaro Magaña, and for a while I had another boss who became president of Panama, Ardito Barletta. So I was, I was involved. I've been following this area with the gaps. I've been interested in other things along the way for 50 years, essentially. And I was amused to find out that probably one of the very first papers that I ever published, not wrote, but published, was called Personal Income Taxation in Latin America, Obstacles and Possibilities, in the National Tax Journal, 1966, I think. So I thought that maybe what I could contribute to this morning was a kind of a historical view development in Latin America as I've seen them from 1962 to the present. Again, I should repeat that in more recent years, at least in the last 5, 6 years, I've not been very, very much involved in this. But, of course, over these years, I was head of the tax policy division of the IMF for 7 years, which was very much involved with Latin America and other parts of the world. And I was the director of the Fiscal Affairs Department of the Fund for 20 years, which was very much involved with Latin America. So I led to missions to Brazil, Mexico, Argentina, Costa Rica, Haiti, and you name it, you know. So over the years, I've seen many, many of the development, and I think I can, with some information, you know, I can give some reactions to what has happened in these 50 years. And I want to deal mainly with the two questions. One is that have there been significant changes in the tax systems of the Latin American countries? And the second, what has happened to the taxation of income, and especially of personal income? Santiago has mentioned, I talked quite a bit about this, and I will present a hypothesis which I feel very strongly about, but like most hypotheses, they can be wrong, you know, and I would like somebody to test it, you know. In fact, in the paper that I've written for this conference, which, you know, it was written in a big hurry last week, but I think most of the points I'm going to make are in it. You know, I suggest that maybe the CEPAL or the IDB should really test this hypothesis. I will come back to it in a few minutes. But let me start with the changes in the tax systems. You know, when you think of changing the tax system, you can think of changes in tax levels or in the structure of the tax system. Now, when in the beginning of this paper, I mentioned the Declaration of Punta del Este, which was the declaration that about 52 years ago or so, the Kennedy period, set up the joint tax program and set up this program to help Latin America. And the Declaration of Punta del Este said that to reform one of the objectives, one of the goals of this Alliance for Progress that was created at the time was, and this is a direct citation, to reform tax laws, demanding more from those who have most. And more specifically, the declaration stated that it would be necessary to promote the reform of tax structures, including fair and adequate taxation of incomes. Could not be more specific than that. So we come back exactly to the point that Santiago was making, and this was a declaration of 51, 52 years ago. Now, the Alliance for Progress, as I said, established in Washington the Joint Tax Program, that was charged with the task of promoting tax reform in the Latin American countries. The Joint Tax Program hired people from the US and from some European, but mostly from the US. By the way, Bob Mandel was also involved at one point with that program. He led a mission he participated in a mission to Peru. And the guiding principles of the Joint Tax Programs were the following: the need to raise tax level and to make the tax system more progressive, the need to keep current government expenditure in order to government expenditure low, to keep it low, in order to generate a budget surplus in the current account, to use the budget surplus to finance capital spending by the government infrastructure, and to promote private investment through the use of tax incentives. So the main elements of the main points of this program was to focus on the level of taxation, to focus on the revenue from income taxation, to focus on tax incentives. At the time, tax incentives were very fashionable. They've become much, much less fashionable today, and to change this in the desirable direction. At the time, of course, Harrod and Domar models, or if you want, the solo growth model, were very fashionable. Therefore, the importance of investment was considered, attracted a lot of attention. And, well, the needed increase in the tax level was expected to come mainly, again, citing directly from the Declaration of Punta del Este, from those who have most, because of the highly uneven income distribution that prevailed in Latin American countries at that time. Well, as you know, the income distribution has not changed. If you look at the data of that 50 years ago and the data of today, there have been some minor, relative minor, maybe some would consider important changes in more recent years, but essentially the data are the same. By the way, I wrote another paper which I like very much. I think is very much up to date. I always urge people to read it, but nobody ever reads it. It's called Redistributing Income Through the Budget in Latin America, Obstacles and Possibilities, And the paper deals with what was happening at the time. If you read the paper and then you put in the context of today, you see that not all that much has changed. The Gini coefficient for most Latin Americans have not changed significantly since that time, although there have been, as Santiago has mentioned, some improvement in the most recent years because of Progress and other programs of the kind. In the early 1960s, the personal income tax was very popular in the United States. In fact, the surveys made at the time in the United States considered tax the fairest of all tax. This is the personal income tax. The tax, was very progressive at the time, and these views, these American views, influenced the joint tax program. Some of the main advisors to the programs were Americans, so inevitably what happened in the U.S. was happening, had an impact on Latin America. The joint tax program tried to introduce in Latin America income taxes similar to the individual income taxes that at the time existed in the United States. That is, broad-based taxes with high progressivity and so forth. However, the progress remained limited, mainly because of political opposition at the time and because of administrative difficulties in these countries. And again, some of the points that Santiago has made. So this happened to some of these aspects. Now let me look at the changes in tax level. Well, in some of this paper, I've used a paper by Gomez Sabaini and by Juan Pablo Jimenez that is here in the room. It was a very convenient paper because it's very rich in information and summarizes a lot of information that is available today. So it allowed me easily to make some points, some comments related, using it as a kind of straw man, in some way, although I agree with lots of the things that the paper says. But I want to make some points on some aspect in which I would present a little bit more different light, One is that the paper says the tax burden has increased considerably in Latin America. However, they add, while some countries such as Brazil and Argentina currently have tax burden exceeding 30% of GDP, others such as Ecuador, Guatemala, and Paraguay have tax burden of no more than 14% of GDP. This is again a point that Santiago has made. They seem to be Gomez Sabaini and Jimenez seem to be a bit disappointed by the progress made by the Latin American countries. Well, on this, I do not share that disappointment, for a variety of reasons. First, look at the statistics of taxation in industrial countries and go back some decades. If you go back to the US, before, up to the Great Depression, the tax burden of the United States, the total tax burden, local and federal government, was 10% of GDP. 10% of GDP. Now, even the poor Latin American countries are paying much more than that. And the tax burden of Sweden, we always think of Sweden as being the most taxed country in the world. Actually, the second most taxed country in the world after Denmark, but by a small amount. The tax burden of Sweden in 1940 was 15%. So that Latin America is well above where these countries were at the time when, I don't know, the per capita income of those countries may have not been terribly different from the per capita income of many Latin American countries today. Second, today tax burden in Brazil and Argentina is significantly higher than the tax burden of the United States. You know, the tax burden of the United States today is about 20% of GDP. By the way, it's exactly the same as it was in 1965. No change, you know? So they are higher than the United States. Third, should the tax burden of the different countries of South America be weighted by the country's population? You know, we average tax burden by country and not by population. But if you weight them by the population, they would be seen to have gone a lot for the citizens of Latin America in recent years. With this adjustment, it is likely that the tax burden in South America, for the majority of the population, not for the majority of the countries, for the majority of the population, are now higher than those in North America. If you take the average tax burden of US, Canada, and Mexico, and you compare with the average tax burden of South America is higher if you do the weighting by country, no? Than in North America. We should not forget that it is people that pay taxes, not countries. No? Fourth, some of the countries with the lower tax burden, Mexico, Chile, Peru, Bolivia, and some others, have significant revenues from rents collected from the government ownership of natural resources. Well, if you rent, you know, if you have rents, you don't have to raise more revenue to finance higher level of public spending. Finally, we should never forget that a higher tax burden is not always preferable to a lower tax burden. This is a point that I think is very important and we should keep in mind. Whether it is or it is not depends on the government capacity to use well in an economically productive and socially desirable way the extra revenue. If the government collects more revenues, but they don't use them very well, then you have a problem. You know, then we should be a little bit careful in pushing government to really raise revenue before knowing that they are going to use them well. Well, one can make the argument that you will never know how well they will use it until the money is raised, but that's important. In any case, the comparison between Latin American countries and OECD countries, which is shown in the Gomez Sabaini's paper, are less revealing than they seem to be. No. They tell little about the taxation of the majority of the population as compared with the majority of country. And we cannot give the same weight to Brazil and Honduras. No, Brazil has, what, 200 million people, and Honduras, I don't know, a few million people. So that's a problem, you know, that I think we should get a little bit away from this idea that all the countries, you know, have to have the same tax burden. Now, let me go to the change in tax structure and make a few comments on this. It would be easy to conclude that there has been a little change in tax structure in the region over the years. You know, if one looks at the structure of the taxes, the proportion of the indirect and direct taxes, one gets the impression that there has been relatively little. But however, if you look more carefully, you immediately realize that the change that have taken place are relatively important, and for some of the reasons that Santiago mentioned. You know, if you go back at the time when I started working in Latin America, what were the taxes which were not collected from income? There were taxes on lots of excises with lots of distortion, etc., etc. There were lots of very unproductive taxes on imports. You know, very, you know, the Prebisch period. This when I remember talking with an Argentine vice minister one time. I think his name, if I remember, was Sagese, was an Italian name. And he told me that his role as Minister of Commerce, I think, was to impede the importation of product in Argentina. It was as simple as that. No. So these are the taxes which have disappeared, and they have been replaces by value-added taxes that, with all its problems, the value-added tax is infinitely better than this tax. By the way, the value-added tax didn't even exist in Latin America until the 70s or so. Now, Latin America has done extremely well. If you take the tax burden of Argentina and Brazil from the value-added tax, These are world record. You know, I don't think there's any other country any other country in the world that collect more than Brazil from the value of the tax, and there are maybe very, very few that collect just about the level of Argentina, about 9%, must be the Denmark and the Sweden and so forth. So that Argentina was collecting close to 11% of GDP, by the way. This is an enormous progress. Of course, the value of the tax is a much better tax for allocation of resources. But people don't mention the fact that it is also a much, much better tax for stabilization purposes. Just think of it, you know, you need more revenue or less revenue. All you have to do is change one rate. You know, you don't have to have discussion in Parliament about incentive, tax expenditure, multiple rates, and so forth. All you have to do is change one rate. This gives a tremendously useful instrument to the government for pursuing stabilization policy, if they can do it. If you get to the stage of Mexico, I've had, I don't know how many times I've had discussion with parliamentarians from Mexico trying to convince me that the multiple rates are always better because of equity, etc., etc. Okay, well, so well, in Latin America, there have been clearly the value of the tax is collecting more because of improvement in tax administration. You know, the value of the tax is a complex tax. You know, Silvani here, Carlos Silvani will be able to tell you how difficult it is. And I remember at the very beginning, I remember a discussion with Professor Oldman from Harvard, who was the head of the joint tax of the tax program at Harvard in Peru, in a conference, not in Peru, in Ecuador, in which he said that the Latin American countries will never be able to introduce a value of the tax. You know, we had a violent discussion with them, and I was insisting that they will be able to do it. Well, today they have world records, at least in some countries. So clearly, the tax administration must have improved because of the use of computers, because of better administrative techniques, because of the availability of more resources which have been given to tax administration, and probably also because of less political interference on the part of the executive branch of government on the work of the tax administration. Okay, there have at the same time, of course, tax collection in all countries of the world, and not in Latin America, have become a little bit more complicated because of globalization. You know, problems that we did not even mention 30 years ago, 40 years ago, like transfer prices, taxation of internet transaction, and things like this, things which in some papers of mine I've called fiscal termites. You know, that has been the term that have entered the system and made the tax system more difficult. So on one hand, there have been improvement. On the other hand, because of the change in the nature of taxation, there have been some difficulty. Well, there in the paper by Gomez Sabaini and Jimenez, their estimation of tax evasion. I wrote some papers on tax evasion also in the past. I think we have to be very careful with this estimation. You know, as I say in the paper that I don't know whether it has been distributed. If you cannot tax somebody, it's very unlikely you can measure the tax that the person would have paid. No. So that we use this tax evasion estimate come from the national accounts data, which one time used to be called the cuentos nacionales, national tales, you know, and we used from survey data, and to me it's always a little bit, that's fine. It's always funny in a way to think that when people come to interview you and they ask you, did you evade tax? You say, yeah, I did, you know. I mean, let's face it, many of these estimates are based on data which can have a lot of errors. Now, let me come in the 4 or 5 minutes that I have, let me come to the income taxation, which is why income taxes have not improved. You know, well, they are the usual explanation which are given: informality, you know, low tax basis, political power of the rich, and so forth. Yeah, all these things that clearly play some role. You know, they explain why personal income tax have not increased. It's not clear why this thing don't work for corporate income taxes. Why Latin America can collect the same amount of corporate income tax as OECD countries, but not personal income tax. So there's something weird there already. You know, you should, because if all these obstacles happen, they must happen also for the corporate income taxes. Unless you make the argument that most of the corporations are foreign corporations, therefore it's easier to tax them. So why the personal income tax remain very low? The highest, I think, 2.6% of GDP compared to many countries where I think Denmark is 24%, to give you an idea, you know. So what is that? And here I will conclude my presentation with my hypothesis, which might be totally wrong, but I like to see it tested seriously. And I have not managed to have an institution to take it seriously enough to make a testing. And the argument is the following. And it's related, by the way, to a recent paper that I wrote on US taxation. It's called The Difficulties of Taxing the Big. You know, was presented at a conference in Atlanta about a month ago. Anybody who is interested, you can send me an email, and I'll pass you send you the paper. But the argument is different. If you look at the US taxation, and let's start with the US taxation, then we go to Latin America. US taxation, and you go back to the 60s, first you find that the personal income tax was the most popular of all taxes. Second was tax with progressive rates, which were relatively high. And third was based on an architecture, what I called an architecture, which was the Haig-Simon architecture, the definition of the income. And the definition was very simple. All income is income. By the way, it's the same definition that Hicks had given. That income is income. Income is purchasing power. So whether you get income from dividends or from wages or from interest, income is income and should be taxed in the same way. Well, what happened, starting in the 70s with the Lucas, Larry Summers, and people like this, as you move forward, you begin to chip away at this hypothesis. And by the time we get to the present time, you get Governor Romney paying 13% on a multi-million income without evading taxes. You know, I mean, Romney, I'm sure he did not evade any taxes. But what has happened is that the architecture of the tax was destroyed by making a differentiation between wages and salaries, carried trade, dividends, capital gains, and so forth, which did not exist before. Now go to Latin America. When you look at the data for Latin America, you find that wages and salaries, for some of the reasons that Santiago mentioned, get at most 30%, I think in Mexico even lower, 25% or so, of national income. You know, the share of income to wages and salary is very low. The taxes on wages and salary have been lower because they have been low because of the Laffer curve, etc. They've been lowered all over. The remaining 60 or 70% that go to rent, dividends, interest, capital gains, and you name it, now they've been taxed at extremely low level because Latin America is very much influenced by the US. Most of the ministers in Latin America have studied at Chicago, Harvard, or whatever. And so the taxes which are levied on this 67% is very, very low. So when you put these two together, you end up with a collection which is very low. And so you don't need really all that much tax evasion to end up with this very low contribution of personal income. Well, this is the conclusion. So I would urge either the IDB of CEPAL to really take seriously this. I might be wrong, and you know, after all the calculations are made, the calculation would consist of seeing what is the share of non-wages and salary in national income in all Latin American countries, and making a listing. By the way, there is a table. A table is mentioned from a book that we did at IDB with the Villela and the Barrakes. that there is a table which shows how low the taxation of these non-wage incomes are in Latin American countries. So in conclusion, there has been progress in Latin America, but the progress probably has not been as great as we should be. But I want to have my last word by stressing that before we recommend a very large increase in taxation, let's worry about the expenditure side. Let's make sure that the money that you would get are well spent. If that's not the case, especially when taxes are not progressive, so we are collecting them from the majority of the population, by all means, don't increase the tax burden. Thank you very much.
Carlos.
Okay, thank you. I'm going to attempt to summarize what these two gentlemen have shared with us. I would love to send both of them up to Congress to help us with the fiscal cliff. I think they need some of your wisdom. Cynthia started out with a very positive note about Latin America in general, poverty down, recent reductions in inequality, higher per capita social spending, in fact, has doubled since 1990. Many of you may have seen a recent article in The Economist on Mexico. Extremely positive, and really gives you a sense that we are on the threshold of a new era in Mexico and the rest of, and parts of Latin America. As Santiago Levy mentioned, we can no longer have a broad remark and lump Latin America in as a homogeneous area. There are big changes. Politically, there are big changes in taxation. There are big changes in prosperity. So we no longer have this similarity across the different countries. I thought what Santiago brought forward, which is a tremendous insight, is how regressive the systems are, generally speaking, in Latin America. On one hand, you have the value-added tax, and it's interesting that in the U.S., many of the tax reformers would like to tax consumption instead of income. But in Latin America, the value-added tax is good for everyone. So therefore, the very, very, very wealthy pay the same as the poor, but the poor use a greater percent of their income to buy goods. Very regressive, and on the other hand, regressive spending. So everyone gets oil subsidies, everyone gets food subsidies, everyone gets electricity subsidies. So I thought that was sort of captured the essence of what Santiago was saying. The number that I had not expected, that just totally blew me away, was this 2/3 of informality. I find that to be just incredibly high, an incredibly big challenge. You know, on one hand, you want entrepreneurship. On the other hand, I have this vision of somebody opening up a licuado stand in Mexico City and having the IRS or the Hacienda come and say, show me your papers. But somehow that seems to be the big, one of the big areas of opportunity. I'm reminded of Singapore, where somebody told me that you can open up a business in Singapore in 10 minutes for $10. But as you do that, you have committed yourself to paying taxes. So, you know, on one hand, simplicity, on the other hand, tremendous obligation. Santiago talked about closing loopholes or tax expenditures. Interestingly, reviewing, and I think you said getting rid of the VAT. Or
the tax expenditures on the VAT.
Or the tax expenditures on the VAT. And the social policy of cash transfers. I believe this was Brazil's Bolsa Familia, Bolsa Familiar. It's great to see that it's spreading throughout Latin America. I wonder if there's an opportunity for something similar in the U.S. Because we have, you know, our poverty is 15%. Of the population lives in poverty, and that has been a number that has been stubbornly stable. Either, you know, goes from 12.5 to 15, but doesn't move. It doesn't move a lot. So the property tax is also very low, and that's also an opportunity. And then speaking of corruption and low quality of services, I just before I turn to Vito's comments, I just want to make a personal statement. When we first came to this country, I actually came Cuba, U.S., Mexico, and then we came back. And I had one word of wisdom from my father. He said, "Whatever you do, don't mess with the IRS. You know, it's part of the culture." And then there's the very famous story that Al Capone was not arrested for bootlegging or murder. He was arrested for tax evasion. And that is ingrained in just about every citizen's mind. And I wonder if there's an opportunity for, as they say, a couple of very public cases that can be brought to light in Latin America to break through some of the political connections that Vito was talking about. Vito's historical sweep was, I found it fascinating, and the idea that, you know, let's think about Latin America as a spectrum, as a continuum. As GDP per capita grows, you will find improvements in taxation. You will find improvements in collection. The comparison of the U.S. before the Great Depression, I think you said taxes were about 10% of GDP, the good old days. Today, I think, you know, we're going to end up somewhere between 20, 21, 22. It was 18.3% or 18.5% if you go back longer periods of time. But I thought Vito's comments were quite positive, and I think rightly so. There have been improvements, and we don't need to raise taxes with a system that is inefficient in collecting taxes. So the key thing, of course, is making the current system more effective. Brazil, value-added tax, almost a global champion. I didn't know that. The complications of the global economy are real. A lot of exports going on. Countries are no longer trying to stop imports. We have very few countries, although we have some, still talking about self-sufficiency. That seems to have been recognized as something from the past. But now that we have a movement of goods across borders, you have a tremendous games being played with transfer prices. And then you have internet commerce, which is not taxed in this country. And as that grows, that continues to be taxes that slip away from the central government. So informality, again, was something that was brought up. And I thought the comment on income is very interesting and very topical, because the argument today in the U.S. is the opposite, is that income is not income. So we want investment income to be taxed lower. And as you said, we started out with a very simple system, and little by little, chipping away. And today, you cannot do a tax return without hiring a lawyer. And if you have money, you can hire a lawyer. If you don't have money, you're stuck with the system. So actually, there's some regressivity there. But I just want to thank these two gentlemen for sharing their knowledge and for giving us the benefit of all the work they've done in this important area. And again, let's remember the cultural part, and maybe we can find an Al Capone in Latin America and use that as a future cultural example. Thank you.
Thank you. Thanks, fellas. Okay, I would certainly be remiss in opening this briefly to questions and comments from the audience, not to identify and personally thank Kirsten Cowell from the Tinker Foundation, who has been so generous on behalf of Tinker in supporting this project. Also, warm thanks to Veronica Colon Rosario of the Latin American Program, Melissa Nolan, intern with the Latin American Program, for all of the work that they've done in bringing all of us together today. We are just about out of time, but I don't think it's fair to have the panel take up all the time and not have an opportunity to ask some questions. So if you could raise your hand, wait for the microphone, identify yourself, please, by name, by institution, if appropriate, and we'll take a bunch of questions together and then come back to our panelists for one last round. So please try to be concise.
Antonio Alvarez Couseiro. Is there really political will to change the tax system in Latin America and to increase taxation? I'm asking this question because a few years ago, I was invited to attend a meeting of former presidents of Latin America, and they were discussing things to be done to improve the situation in those countries. There was no mention to tax increase or the taxation changes.
Others? Let's just see if there's another quick comment or question. Right here, and then back there.
Just to, one is a comment is that...
Your name, please?
My name is Alberto Barrex, I'm from the IDB. I work in taxation a little bit. And the last tax reform we have changed. Two-thirds of the European countries abandoned the high salmon definition.
They abandoned what?
Two-thirds of the European have changed from the taxation, from the high salmon definition, and they moved to duals or the semi-duals that we put in Latin America. If you check on the islands, and let me say Japan and the UK and the US, there is also a dual taxation, particularly because dividends and capital gains are taxed on another rate. And many of the times, interest and dividends and others are also taxed at different. Do you really see future on a competitive world for a high salmon definition?
Okay, the last comment over here.
Hi, my name is Sven Witthoft. I'm a grad student at the Elliott School. I'm just wondering, looking at the high resource revenues, do you think there's a way of improving services and public service provision first to increase the incentive to contribute to the system, and in a second step, increase taxes?
I'd like to recognize Jane Harmon, our fearless leader, who's joining us here in the front row. Also, Ambassador Carlos Pita, from Uruguay's ambassador to the White House. Thank you for joining us. Vito, why don't we start with you in reverse order?
Yeah, it's, I mean, the will to raise taxes, raising taxes are never pleasant. There's always an asymmetry in the behavior of policymakers. They are always willing to increase expenditure and reduce taxes rather than do the opposite. In fact, this is a kind of asymmetry that Keynesian economics is always ignored, but it's very important, But I mean, the evidence of Brazil and Argentina and a few other countries in Latin America indicates that if there is a strong will on the part of the government, if they are willing to gamble, to take the political risk, the taxes can be raised. In Europe, I mentioned that Sweden, that in 1940 had a tax burden of 15%, and now has a tax burden about 50%. So clearly, over a couple of generations, the tax burden has gone up enormously. The same has happened in many other European countries. So it's, it's not very easy, but it can be done. The Hague-Simon, well, this is really a problem. When you have several Nobel Prizes recommending that you should not tax a corporation, you should not tax capital, the capital should be zero. You know, Lucas has a statement somewhere which says that, you know, the taxation of the capital at zero rate would give us a free lunch, no? And you know, this, as I said, there is a lot of exchange of ideas in the world. I mean, after all, American universities are still the best in the world. You know, the top people come to study in the US. You know, they are absorbed some of these views. And clearly, if one country goes back to the 60s and put the rates, you know, yeah, I always cite the Beatles song, the famous Beatles songs, in 1966, called The Tax Man, right, which said, I'll tell you how it will be, 1 for you, 19 for me, because I'm the tax man. You know, the marginal tax rate in the UK at the time was 95%. You know. So clearly if a country does, but the others don't do it, you know, it's a problem. So this is one area with a capital good, in a way. We could say that it's a public good to have a Hague-Simon definition that must be endorsed by all countries in the world, and that's where international institutions maybe can play more of a role. Yeah, I don't know, maybe the third one, I'll leave it to Santiago.
Just a quick point on the first question. So is there the political will? I think the interesting point now is, in Latin America, I would bet that macroeconomic stability is a bigger political value than taxation. This is an immense gain over the last decade. So in the political ranking of what a politician needs to preserve, in my view, in not every country, but in most countries in the region, macroeconomic stability is a bigger objective than anything else, because societies have really suffered from the absence of macroeconomic stability in the past. So rather than political will, it's a political need. If push comes to shove and the macro accounts don't look so good, they will raise taxes. That's different from doing tax reforms that keep taxes the same and try to improve the system, make it more progressive. That's more difficult. And that requires more political will. But in terms of raising taxes to keep macro stability, it will happen, in most cases. On the last question, yes, I think you're right. And this kind of a vicious or virtuous circle, it can be a vicious circle, right? You pretend to give me services and I pretend to pay taxes. Or you can also turn it into a virtuous circle. You give me good services and then I feel that I should pay taxes. And there's a space to begin to breaking that vicious circle on the quality of services. And I think governments could work on that margin.
I'd just like to say just a general statement that we talk about globalization a lot, but the world is actually regionalizing. And, you know, you have the European bloc, and there will be an Asia bloc in about 7 years called ASEAN +3. Which will make Asia the biggest trading area in the world. That's going to put a lot of pressure on the Western Hemisphere to get their act together and be more of a region. And for countries, you know, today, for example, the iPhone is designed in the U.S., but it's manufactured in China. 80% of the value stays in the U.S., 20% of the value goes to China. Why couldn't that iPhone be manufactured in the Western Hemisphere? That's going to put pressure on whether it be social spending, the cash transfer programs, but to develop the human capital to attract more and more investment and recognize the regionality that is absolutely necessary in the Western Hemisphere. And I think that will put some pressure on governments to focus on taxation. Where are they going to get the money to do what they have to do in terms of infrastructure, in terms of human capital, in terms of the skills required to merit the kind of investment that I believe is coming to Latin America over the next decade or so.
Please join me in thanking our panelists. Because we have a really excruciatingly tight schedule for the morning, I'd like to ask the next panel to please come up to the front if you need to grab a cup of coffee or use the restroom, please do so, but we'll try to minimize the amount of time between the breaks. Thank you.